Hello everyone, and this is Flying Cryptos, and welcome to the Trading Basics series. This is a pre-recorded series that you can always take a look back on to gain some basic knowledge on trading. And in this episode, this is going to cover uptrends, downtrends, and timeframes, and the importance of timeframes, and what to be looking for. In the second episode, we'll be going over support, resistance levels, and pattern recognition. In episode 3 will be volume, RSI moving averages, and the exponential moving average, also known as the EMA. Episode 4 will be using Fibonacci. Episode 5 will be risk management, FOMO, and stop losses, which is the most important episode. And then episode 6, we will put it all together. So before I get started with this, I'm going to try to keep these courses to a minimum, and they are free. So I will mention down in the description below, there is a tip link for donations. Would be greatly appreciated. But most importantly, like, subscribe, and check me out on Twitter if you're following this on YouTube at /Flying Cryptos. All right. So uptrends, downtrends, and timeframes. What is an uptrend and what is a downtrend? Well, I got a nice little chart right here, give you a visualization. An uptrend is a higher high followed by a higher low, a break of that previous higher high to a new higher high. So you'll see this pattern right here. That is an uptrend. Now we can have these uptrends on any time frame. They could be on the 5-minute chart, they could be on the 30-minute, 4-hour, daily, weekly, monthly, you name it. Same thing with downtrends. Lower low, lower high, loss of the lower low, create a new one, and we continue down. So let's take a look at a 30-minute chart here on Litecoin. This right here was a 30-minute downtrend. We reversed, had a reversal signal here, which was an inverse head and shoulders, but we'll go over all that pattern stuff in the next episode. But let's get back to basics. So we have our lower low, our higher low, lost the lower low that we set to create a new one, and we see this downtrend. And as soon as we broke above that previous higher low, we are now in a 30-minute uptrend, provided we set a lower high. Now, we can use this on short time frames or high time frames, as I said before. So let's go to a higher time frame. Let's go to the 4-hour. This could potentially be the start of a 4-hour downtrend. And I'll tell you why it could be. It hasn't confirmed that yet. But if we reject off this level here, we'll have that 4-hour downtrend. This could be a bottom. If we set a higher low and continue back up, go up to the daily. Now this is a daily uptrend. Now, what is the importance of uptrends and downtrends on these different charts, on these different time frames? Well, the importance of that is if we're holding a daily uptrend, but we're in a 30-minute or an hourly downtrend, is that right there, we are testing to hold the daily uptrend. So this might be the end of that lower time frame move to the downside, or should I say lower time frame downtrend. Because this was an hourly downtrend right there. And getting more into this in episode 2 will be the support and resistance levels, as well as going into more detail on trend lines because uptrends and downtrends pair well with trend lines. The trend line helps you identify the trend. So something like that right there, that helps us visualize our daily uptrend. And this line acts as a support to keep that momentum going. But to lightly touch on it, if we lost this daily uptrend off this previous higher high and we fell below it, and then we rejected off that previous higher high, that would be the start of a daily downtrend. Now, for long-term holders in cryptocurrency, this is a good signal to get out of a long-term position and sit on the sidelines and protect your profits. The lower time frame is utilized mainly by traders or swing traders. If you're day trading and you're making a couple trades a day or multiple trades a day, you're going to be looking at those lower time frames and watching for those uptrends and downtrends on a lower time frame candle. Now, we'll also take a look at the weekly. The weekly is probably the most important time frame for anyone holding long term. The higher the time frame, the more weight that uptrend has on the market, if you know what I'm saying. If we were to lose a weekly uptrend, chances are we'll be consolidating for many weeks ahead. If we were to lose a 30-minute, we might only be consolidating for a few hours or for a day before we see a reversal or a bounce off of a level. But if we were to lose a weekly uptrend, chances are we'll see much bigger moves to the downside. And it'll also take longer to get through that. So that is uptrends and downtrends and an introduction to timeframes. Thanks for watching, everybody. This course was provided for free to you guys because it's all about the community at the end of the day. And I'd like to help as many people as possible. And in episode 2 will be support, resistance levels, and pattern recognition. And we'll have a lot of information in that episode. So please subscribe, hit the notification bell, follow me at Twitter at Flying Cryptos. Have a good one.